Finally, a Sunday night gave us something to talk about, John.
Yep, we are back from the dead. It came back, a surprise Sunday night. What this means, we had a huge move. We're following through today, and most importantly, what levels what levels are a guy looking at to sell? I think that's what we're going to talk about this episode and more.
Can't wait to hear them.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, I don't know about you, but I am starting to get a little sick of the daily thunderstorm.
Yeah, we're in a very wet area here, and it just keeps coming. We're like what Central Illinois was going through. We're catching rain nearly every day now, and it's not really hurting the crop or anything. But yes, I'm sick of it. We have more on the way. As we look outside right now, it's dark. As almost sunset, well past sunset. It's threatening again. Tornado in Detroit Lakes, a small town near us. So nasty weather, but the question is, if it's raining, and it's really only raining for North Dakota, Minnesota regularly, why the big day yesterday in grains?
I have that's my question here is when $5?
Yeah. Well, you know what?
Are we going to see $5 corn
it's
in
funny.
July?
I've been asked that a couple times. No, what you have going on, why I think it was really important and almost a landmark day. It was when it opened on Sunday night, people did not know if it was going to be up or down 5 cents. Everybody has different weather, and that's kind of what we hinted at it at the beginning, is that everyone's kind of going through a different weather pattern this year. It's not this widespread at all. And then, so we had some rain mixed over the weekend. Iowa got a lot, and a lot of people thought it was going to open down. Now it opened up, 5, depending on the beans or corn. Anyway, had a nice open, and he had steady buying all night long. Like, it didn't waver. It didn't have big dips. And then that's one thing to have that on Sunday night, kind of mysterious why it was up. Then it followed through the next morning. But that's not the important part. How it acted the rest of the day yesterday was the important part. This is the stuff that when you get quotes on TV or online or on just however you get it on your phone, you're not seeing this price action that we saw yesterday. These are the little details that really can help a guy out sometimes. That's what we're around for. We're watching every tick. This has been happening in cattle too, and we'll break it down. So cattle is a market that's been a bull market. It's had buyers. It's had buyers on dips. Then one day, about 3 weeks ago, it changed where they're selling it, even selling rallies, and it's just got this different look. So it's hard to describe what it is unless you're watching every tick. Now, grains haven't had what they had yesterday in a very long time. We've had big up days, but not like the way it happened. It's decisive money being put into the market like they know the answer. They are confident in what they're doing, and every little shallow, tiny dip, and that's the big difference, was met with buying. Where we've seen these surges in money, and let's say corn surges up 12, oftentimes it'll cool off and be up 6, even if it goes back up 12. We didn't see any of that yesterday. It was, we know the answer, and we're going to buy at any price.
And that's what we saw this morning, too.
Yeah. And
overnight was down a little bit. When it opened this morning, I don't remember what corn was down again. A couple cents.
Yes, it was up 6-7 cents right before we went on the podcast here.
Yep.
And you're seeing it again today. So this is that confident buying. Well, how could they possibly know? They have better weather guys than us. They have the best in the world. And we've said this numerous times. I used to get chuckles at that, but a lot of people actually believe that now. They do. There's big money in finance. There's big money in weather. Oil companies, energy companies, logistic companies. There's a reason why you'd want a very good weather guy. The modeling is getting better. They simply can see what we can't see, 2-3 days earlier is what's been happening. That's what we saw the last couple of summers.
It's important to note, too, that your best meteorologist isn't the guy on TV.
No, it
It's
is.
the guy working for these funds.
And you're never
the
gonna
guy
hear
working
him.
for the military.
Yes.
It's the guy working for the government. So, or, you know.
And it's an interesting business. It's very competitive. Everybody goes online trying to make a name for themselves, and they try to outdo each other's model by being like earlier. Like earlier, the better. And if you're early and accurate, that's where you're going to get scooped up. It's going to get noticed that your modeling is better than the next guy's modeling. It's actually a really interesting area, if you dive in. But there's big money if it's like, you hit the lottery. If your modeling works, you're going to get scooped up by a big business. Anyway, so that's part that. It's part China's involved here and the cash market's firming up. It's part that farmers have sold a lot more grain this year than the last 2 years, where they held it into the end and made that late August low. So it's a combination of things, but it's really healthy looking. Unfortunately, we haven't had markets that have followed through, but I'm telling you, this price action looks a lot different, and we're already, 464 December. Mm-hmm. Remember when we were just talking about don't panic? Here's the numbers where we've been the last 2 years with giant crops. And hopefully guys didn't panic and sell a bunch in the hole here. Now the calls are definitely, if you missed the first $5 like you talked about, am I selling here? And I'm sure that's what everybody wants to hear. It's like, yes, these rallies are good for catch-up sales, without a doubt. So what levels are guys thinking about? The first one's going to be like that 470, 475 level. And the reason why that level is important is that's where profitability begins for, like rented acre. Just, everybody's different. Every farm's different. You're going to have profitability at 425 in areas. But, just as a general rule, you're looking at 460, 470. That's where the profit's been. So that makes sense where that would be the first sales, and it's kind of a nice round number.
And remember, those round numbers are also the same round numbers your neighbors are looking at.
Yeah, exactly. And that's why I get a lot of calls, is they're testing the water, seeing what I think. Then they're going to call, the elevator. Then they're going to call their buddy. And they're going to get this consensus of numbers where I should start marketing because, it's just you're flying in the dark. So the levels that we saw are 470, and then of course it's going to be the nice round number of $5. And then it'll be a ton at 510 because it's had very hard times getting past that. So the levels are important because it's psychological. That's where people are selling. That's where it's going to run into a wall of resistance. But I think a lot of December has gotten sold. Are they going to go to 100% before they know what they have? No. So if you're at 60%, you got another 10, maybe 15% that you're comfortable with.
Which is an extremely important fact to point out, is that when you're talking about marketing these percentages, you gotta know what other guys are at about.
Yep.
Start assessing like what the other people, how much do they have marketed, but also being really aware of what you do as well.
Yeah, and Ryan and I, what people don't use and enough is guys like us, where we have a vast resource of a networking that we get to hear where everybody's thinking about marketing, and then if it isn't them, then indirectly it's going to be like, they know somebody at Cargill, and you built this network over 20 years, and then other brokers that we'll talk to, and you can get a really good consensus of where everybody's thinking. And instead of doing all that homework yourself, you could simply call Ryan or a guy like us and get those estimates on those numbers. And it's a very good idea to do that. That happens very often, by the way, where guys use their broker. Because we talk to so many people in so many different directions, we have a very good feel of where these orders are likely to be.
And across the country, and not just your back.
And not just your backyard. So you get it covers a huge swath.
Because if you want to go to the diner and have that being your sole source of information,
it's going to be trouble.
Go ahead.
Yeah. But let me ask you, how's that working out for you?
Right.
Yeah. No, and it's not that they don't know anything. They just know a little bit of something in a small area. That's the problem, where we get to cover such a wide swath. And that's one of the benefits of being a broker. You just see so much information, and then we get to filter it out. And by the time you get it, hopefully, it's helpful to you.
Not to say the diner isn't a great piece of that puzzle, though.
Yeah,
it's good
and
to hear
there's
the
a
psychology.
lot of
I
other
enjoy
stuff.
The coffee.
There's a lot of other stuff mixed in that conversation as well.
Right.
That is a cafe.
Go there,
conversation.
just don't mark it off.
Yeah, unless it's working really well for you, then keep doing that. But I doubt that's happening. So anyway, it's just a different look. Very healthy. No one expected it, and that's how bottoms come in. Now, is this the bottom? Are we going to work our way higher from here? I think you also have a touch of inflation in this stuff. You're not seeing these. We did hit in the 390s with July. We hit in the 390s, I think, the last 2 years with December or September, just briefly, and came right out of there. So we did print 390 this year. Was that the low? It very easily could have been. It's going to depend on the weather. Without filling you full of all kinds of stuff, it's going to depend a lot on how this stuff finishes. But what's different this crop than the last two crops as well is no one's confident of what's out there. Last year at this time, it was definitely, well, we weren't quite there, but it was almost the too tight tassel. And then it was like these really stuff that people were really reaching for that were going to wreck the corn crop. This year is just general confusion, and it shouldn't be. What you have here is a fairly normal growing year. It's not ideal, and it's not bad by any stretch. You just have regions with certain problems. Other regions, too much rain, shallow roots. This one's not enough rain. You're more of a normal weather pattern, which should keep a bit under this stuff for right now. But enjoy it and use this market again. Use it to catch up on sales. We don't know if beans are going to put on another 50 cents today or that it's going to be done. You just simply can't know. We're not past the danger zone, though. July into August is usually a very weak seasonal period of time. Could this go to $5? Yeah, it could easily.
For a minute, though, because it looks like August is going to hit 12.
Yeah.
It just November's definitely 2 cents away as we speak. So,
yeah.
Is this the runaway market? Are we gonna just keep going up? Can we never go below 11 again? We talked about that.
What it has is, and I don't want to compare it to 2020, but it has some of the same things going on. Where it really differs is we didn't have a short crop in 2019 that really set 2020 off. 2020 was bearish on paper, but got very bullish very quickly, realizing the supply was a lot lower. And then we had great demand. We have great demand here, and any bump in the road would lower supply. But you could argue that for the last 2 years, the corn's maybe been overcounted. But it's not the same as 19 where you had all those prevent plant acres. It's just not the same thing.
Overcount.
Yeah, so I'm not saying that it's going to do that, but it does have a lot of the same stuff going on. Kind of this, we're not sure what's out there, and China's starting to bid for some of these grains.
And you've been talking since, pretty sure last August, 83 million acres.
Yeah, and China dropped some tariffs, and it's trending more China-friendly for our corn and beans. And they did buy some beans yesterday. So you have some of that going on. Now you throw in a heat ridge that does actually set up, and then we don't know what we have during pollination, then you're going to have a bid under this market. And I'm not saying it can't go down, but it's a different market. It's a different animal this year. We've been talking about how different it is this year. Then it started looking like we were completely wrong, and this is just going to do what it's done the last 2 years, and it's already not doing that. So I'm happy this is happening. It's going to give you guys time to catch up on sales. You missed $12 the first time in beans. Well, you're going to probably get another chance.
And just remember how you felt the last time you missed it, though.
Yeah, and just know that nobody knows the weather. No one knows how this is going to turn out. To try to predict this and know it's going to go to these levels, just what you want to do, and I think this is kind of what this podcast is about, is psychologically know where all the sales are going to be and try to be ahead of those guys on the way back up here for your sales. A lot of the guys I've talked to have sold enough to levels where they were comfortable before it fell. But still, when you have 40% of your crop to sell, you still feel nervous when you start seeing a 3 in front of corn. And guys were getting nervous.
Especially with the cost of inputs.
Yeah, and here they're going to be pretty confident in the yield if we get through the pollination good. But other places you can't market to 100% and not be able to come up with those bushels if you're contracted. So it gets to be a game of cat and mouse this time of year. And then some guys will have nothing marketed. This is your relief rally. And what are we, 20-some cents away from $5 in December? and it could cover that very easily in a few days if it's hot and dry. So now we have a weather market, and we won't predict what it's going to do. Just be ready to act very fast. Have your orders in, which we talk about.
Are you saying have a plan?
Have a plan.
Know your levels?
Yeah.
Work with your banker?
It looked like you could just rip up that plan and throw it away because you didn't get your levels hit. Now you might have all these levels hit. This thing might be going to $6 for all anybody knows, depending on the weather. But
John,
plan for that. Hey, I didn't jinx it because it hasn't been a 6 in a long time. So, and it's the midsummer when it usually goes down.
You know what happens if it gets to 6?
What happens?
Then guys are waiting for 10.
7, at least 7.
At least 7.
Yeah, stick with your plan because we have a lot of carryover. Yes, it's getting more constructive, but be realistic. And if you want to go for it, you know what I mean? Look at puts. Look at shorter term puts.
I was going to say there's ways to keep your upside open. You've talked about it over and over.
Yeah, before it would be like we have the entire growing season and you have to have December, you have to have November puts. Now, if you just want to see what the next 3 weeks are, buy a shorter term put. Don't commit to this price. Give up 11 cents at the bottom line and say, hey, I want to see what this thing can do. There's ways to cover the downside. What's been difficult with these numbers, though, is you can't get nickel and dimed, because that's the profit on your corn. So you've been caught in this bad thing where you can't hedge. You can only market on the way up. Sure, you can take a lot of risk, selling calls, buying puts. What are some of the other things that we're looking at? Let's go over that real quick.
Yeah, I'd love to hear it.
December 26, 27 corn. That got to an interesting level, negative 34 before this all happened. It doesn't get out much past negative 45, or it hasn't in years. So, you have some lower risk things, where they got a little ahead of themselves. I'm already tracking December 27, 28 corn. If you look at December 27 corn, we're creeping up towards that 490 mark already. So are you thinking about marketing next year? I'm not a huge fan of that, but I tell you what, you will find your highs for months this time of year for the next year's crop, if that makes sense. Meaning like when this year's crop tops out, next year's crop tops out, generally it'll take out that high eventually, but not always. Sometimes you find the high. So we're near 490. Is that a price that interests you for next year?
For a percentage.
So just when you think you're done spraying and you're working hard and you just want to rest, now you got to think about marketing it again. It's flared right back up to where you're going to have to make some decisions going into next year. And again, confusion dominates this market right now. Is it China? Is it the weather? Is it funds? Is it inflation? It's a mix of all of them. They're all right. And what I'd like to see is that the funds sold it very aggressively and that market absorbed it very well in corn and now is bouncing and it looks healthy.
So what really interests me, not saying I would trade it on either side, but the July, November going into expiration, I think there's 7 days on that, is still -4.
For the beans?
For beans.
You can't be in that anymore.
No, I'm not saying you should be in it.
You mean
it's just interesting that it is.
It's showing you where it is. Yeah, some guys that were in the July, November had rolled the July into August.
Yeah.
There's a lot of spreads that you can't do that with, and that one is not the same as July, November, but August, November is not too different.
No, that's what I was going to point out, was that August, November is the exact same, -4 as well. That's interesting with what beans have done since the report.
And I think we talked about the spread in the insider, if I can remember. And guys had entered it. The reason why they're entering it is they were calling me and saying, hey, this cash market's coming up here. It's coming up here. Is there a way that we can get in this? And, then we talk over stuff, and that's the route they decided to go. So there's definitely guys that called in on noticing the cash market tightening. Then you show where August, November was on a 20-year chart, and it was very appealing, the levels, the risk versus the reward was very appealing at those levels. And that's kind of how that trade happened. Of course, I did not put it on. I should have. I love that stuff.
Yep.
I had July, November, and I wrote it down, and I never did roll it.
And for John's point, like know your dates, because technically you could do something with this spread.
Yeah.
But you do not want to know your dates. I was just thinking it was interesting that it was still at -4 and you got -4 on August, even with this rally.
And for those guys that short contracts at elevators or wherever where they make you roll, just know like at a place like this with the futures that you can stay short into first notice day. Now, you don't necessarily want to, but you can. You're not forced to roll until last trading day. Now, would I stay there? I wouldn't stay until last trading day either. But in cattle and live cattle, which is a deliverable product, it's not uncommon to be in till near the last day, where elevators and some of these other places make you roll days early. If you want 4 or 5 more days, I mean, it easily can happen here. That's something a lot of guys don't know. Now, if you're long, that's not the case. That you can be delivered against, and they kind of frown upon that. You can redeliver, but you don't want. But if you're short the market, you can't get delivered against short. Now, if you stay short, you're going to have to deliver that, eventually. Yeah. But you can't get delivered against when you're short. Anyway, that's, a quick side note there.
Yeah.
But
those are the things you need to know on why it's good to have a broker who knows those things.
Yeah, and brokers, the whole thing's changed. You're getting all kinds of information online. Let me ask you this. Is that information helping you online, or do you still need to talk to like an old school broker? Now, I'll be the first to say, though, the last year and a half with what's going on in the grains, there hasn't been a lot to talk about. It's hard to make recommendations. We've stuck with like market incrementally on the way up and real simple stuff, but still there's not been any meat on the bone to get a lot of stuff done. And so the recommendations are few and far between right now. We also believe you don't just put stuff out there to put stuff out there. When moves need to be made, we'll say stuff. But let me ask you, is this flood of information coming to your phone more than ever, is it actually helping your marketing or hurting it? Are you learning anything? I mean, how is it? We'd like to get some feedback. To me, it seems like you have analysis paralysis. You just get an unbelievable amount of information at your fingertips. All that's going to be old instantly, and everyone's going to be reading the same thing. I don't know how it's helpful. But you will find nuggets of wisdom here and there on the internet. But other than that, it's all old news. It's just that you get the old news faster. Where you want to, I feel conversations the best. Sure, emails are fine and all that, but conversations are the best. Have plans, and you will be leaps and bounds ahead of other guys. But still, back to what this episode's about. Have those orders in. We might have a second life here. If you don't want to commit to bushels, start pricing puts and leaving the upside open. But we have a better market. Finally, something that looks different.
I like it.
I'm excited.
That is a great spot to wrap it up, John. Just an item of note as we head into this shorter podcast here in the next couple is July is busy. We got a few things going on. So we're going to have our episodes will be a little shorter.
We'll have guests
They're still going to be packed with info and a guest on the 21st.
Guest on the 21st, and then remote. You'll be remote. I'll be live. It's just the busy summer, right in the heat of it. It gets a little bit busy, but we'll be off and on. And for the insiders, what you're going to see a completely revamped. Not that sending stuff out would have helped anybody, but it's been very quiet. But you're going to see, you should see either Tuesday or Wednesday, kind of a weekly update. You're going to see that in print every week for the insider.
In addition, sometimes that weekly update might say "sit on your hands" and that's it.
Yeah. It's gonna be, but you're gonna see more emailed information as well. These just have been terrible markets for any of that. You're gonna get yourself into more trouble by doing stuff, and that's the hardest part for marketing. Sometimes sitting on your hands, and sometimes that's all you can do. I felt like guys got to levels that they needed to get to. Then the market fell off. Now we have a new market, and we're going to need more information out there. Hopefully it's a big shift, and we have something completely different than we've had the last 2 years. We're due for it.
See that.
I would too.
All right, John, leave your number.
218-731-1578.
Thanks, John.
Yep.